What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button. That way you're notified whenever we release our videos. We do release videos Monday through Thursday, as well as once on the weekend. You can follow us on X if you'd like as well, at Bullish Chips. For today's agenda, we're going to go ahead and recap today's intraday price action and look at the QQQ internals as well. We'll take a quick view of the price action for the week, the month, the quarter, and the year, and then we'll get into our 4-hour markers and triggers and targets for tomorrow, and we'll review the ones for the week, the month, the quarter, and the year. So just looking at the charts, let's get in here. Looking at the intraday price action, we can see the 4-hour levels that we use every day for intraday trading. We've got the opening print, we've got the overnight high, we've got the previous high of day, the 4-hour trigger to the upside, 4-hour trigger to the downside, and then the previous low day. So obviously these really didn't come into play today. Price action was pretty consolidated all day. A little bit of, if you caught the higher low here, then you could have, actually this one wasn't even a higher low, I don't think, on the 15. Yeah, no, it wasn't even on the 15. So it wasn't really a trigger to the upside in terms of a higher low, because you did get a lower high here with the lower low, if we're looking at it from the 5-minute perspective, and it was below opening print as well. So the basic rules are looking for lower highs underneath opening print to get into puts, higher lows above opening print to get into calls. So that wasn't really a trigger if we're just following our rules. It's real early in the morning, so you don't want to jump in anything too quickly. You could have taken this higher low here that was right at the opening print and rode that up until you got a lower high. But again, that's not a lot of profit that you're going to get from that. But it is a safe play that you could have took, and even if it doesn't work, you stop out at even, maybe even a slight profit. At worst, a very small loss if you're trying to give yourself putting your stop at the previous at the low day or something like that. But you can see with the gap up, we hit this weekly broadening formation. The daily broadening formation, this orange line. If you're not familiar with broadening formations or the numbers on these candles, it's the basis of our trading method. It's the strat. It's very simple to learn. It's the easiest way to understand price action. A candle can only do one of three things, be a 1, a 2, or a 3. And then based off of some combinations, 6 major combinations, there's reversals that you can get into with very clear entries and very clear exits. So, of course, we layer on a couple other things, like I said, with the 4-hour markers, especially for intraday trading. But from a high view perspective, it's just a very simple way to look at price action. So, again, we hit this daily broadening formation. We've got that lower high downtrend line here on the week. Remember, we made a lower high on the week before we made the higher low last week. So we're fighting some resistance up here. The market maker's expected move high is right here as well. If you're not familiar with that, check out our weekend video. We go into a little bit more detail about how we get the market maker's expected move for the week. So ran up against resistance, and then it was just kind of a slow bleed down back to the year flip. The one thing that we can say positive is that we're in full time frame continuity to the upside for the time being, right? So the year is green, the quarter is green, the month is green, the week is green. So we've got full time frame continuity to the upside. So momentum is at the bulls back. So that's why, even though we're at the top end of the range that we've been in for the last 11 weeks, we haven't jumped into puts just yet. You could have dipped your toe into some puts today towards the end of the day when we went 1, 2 up, 2 down for the reversal. When that triggered in the second 4-hour candle of today, we weren't at the desk at that time, so we weren't able to enter those puts. But those would be like an early entry. Looking for October, November expirations back to the bottom of the range, the 2350 area. I'd say that's a pretty safe play if you were to get into those today at the end of the day when it triggered. So we had that resistance that we're running up against. Do we get a pullback? It's essentially a double gap at this point because we gapped over a gap that was already there. So, we've still got this gap here. From an intraday perspective, though, you can see how it respected our major levels quite nicely, and not a whole lot that you could do today unless you're just really scalping on a small time frame. Let's go and look at just everything from the day perspective. Excuse me. And chart's a little busy, but we've got some good major levels in here to keep us aware of, right? So here we've got the top of the range around 24, 25, I'm sorry, 28, 29 area, the bottom of the range at 24, 23.50 area, right? So we're hitting this lower high downtrend line that we've got here. We're bumping our head up against this daily broadening formation that we've got from down here. So could we have a little bit of a pullback, maybe fill this gap? Possibly even retest last month's 50%. It's a possibility, but for right now, we're full time frame continuity to the upside. It's a hammer-esque, candle today. Not just a full candle, a little bit more wick at the top than you would like with for a hammer, but it did finish green, and we're continuing to move to the upside, if ever so slowly at this point. Intraday, that is, we're having a lot of overnight, gap ups. We had the gap up here and then the gap fill, but we're having a lot of overnight moves. So the swings are important to keep in your pocket, right? So we keep buying calls down here with, at least a month out expiration, and we're buying puts up here and selling calls up here as well to get back to the bottom of the range. We've been doing that for 11 weeks. So the day, not too much to say. We didn't have a huge day. Again, we're at the top of that range, so we're just trying to see if we can break through. Maybe we get another gap up over it tomorrow to clear that market makers expected move high and that weekly downtrend line. Maybe go test last month's high, but just keep in mind that we could go to the downside. When we get into our triggers and targets here, we'll be ready for that. We'll have those set. From the week perspective, we've no longer an inside week. Excuse me. We have pushed 2 up on the week. So again, locked in the lower high. I'm sorry, higher low. From last week, and we continue to push up at that market maker's expected move high. So do we see the magnitude of this 2 down 2 up strat, which would be the high of this candle? Possibly. I think there's a good possibility that we do see it, but we'll see how it opens tomorrow. CPI is released before market opens, so we'll have a pretty good idea at least how the market should open by the time it does open, because we'll have that pre-market movement. Again, from the month perspective, not a whole lot to talk about. Same thing kind of going on because we had such consolidated price action today, right? So we're still inside of the month. We haven't gone 2 up yet or 2 down. So not making a move on the the monthly time frame. You don't make a move on a 1. So we're full time frame continuity to the upside. We've got momentum going, but we do want to watch out for this weekly broadening formation. We could run into that even if we go 2 up. Quarter, still the same thing. Basically, we're in force with the 2 down, 2 up, targeting the high of the candle to the left of the 2 down. So looking for that 36.15 level. Not a whole lot else to talk about there. And on the year, we're actually back green, right? So we keep dealing with this. We had the 1, 2 up, 2 down. Didn't quite reach magnitude, and there was still kind of a threat on the board with all these gaps down here and the fact that the year was still red, but we're back green. Looking to kind of hammer up here if we can. If we can do that by the end of the year, that would be real nice. That would give us a lot of momentum, pushing back to the upside, targeting the high of this 2 up candle with the 2 down, 2 up reversal next year if that does happen. So we've gone over everything from a high time frame perspective. Let's look at we can look at the internals real quick because it shows how the Qs were kind of disjointed from the chips today, and you can tell why by the internals, right? So you've got SOXL's price action up here on the left. In the bottom left, we've got vol QD, which is basically money flowing in versus money flowing out, and then tick Q and ADQD, which are just measures of breadth. So you can see money was still, was coming in. It's not like money was coming out. We weren't below the 0 line, but breadth, got worse as the day goes on. Meaning that money that was coming in was concentrated. It wasn't spread out throughout QQQ. And one of the places it was concentrated was the chip sector, because QQQ is underperforming SOXL and SMH, underperforming chips all day today. So You can kind of see that from the internals, and you can know that, you know, what you're playing with here in chips can be, you know, kind of you know, it can easily the bottom drop out, right? Because that money that's coming in is so concentrated in there. If the money stops coming in, then it's going to catch back up to the Qs, and you know, money's and your price is going to drop out from under you. So something to just keep in mind. You're not going to make your trades off of internals, but it's something, you know, another tool in your tool chest. So let's look at the 4-hour triggers and targets. Oops. Yeah, we're on the 4-hour. Okay. So let's go ahead and look at our triggers and targets for tomorrow. We gotta we'll look at the intraday first real quick. Looking at the scalp, we'll go to the 5-minute. If you're gonna do some intraday trading tomorrow, some scalping or something like that, you know, you'll want to look for our 4-hour markers. Oops, come on, Thinkorswim. Right, so far the overnight low is here, overnight high is here, previous high of day is up here, previous low of day is down here. We've also got the 4-hour trigger to the downside, which triggers at the same point the day triggers, and then our 4-hour trigger to the upside, which triggers not too far from the day trigger to the upside as well. But we've got those in mind. You know, say we do open up down a little bit. Let me get a line out here. Say we open up down here. We're just looking for higher lows above this opening print level to first target overnight high, previous high a day. From an intraday perspective, if we get open here and we get action to the downside and then we get a lower high here, then we're looking to get inputs, first target being overnight low, second target being previous low a day. Now the overnight low and overnight high are going to move by the time we open tomorrow, so overnight high might be up here, overnight low might be down here. So if that's the case, then obviously the first target would be previous low a day, then overnight low, or previous high a day, and then overnight high if they're above or below those levels. So we just whichever one comes first, that's the first target, and then the second one comes, that's the second target, right? So we have our plan for the intraday trading, not too complicated, easily reproducible every day. It's proven, it works, right? So that's where we're standing from that point. Let's go back to the 4-hour and get our triggers and targets from a 4-hour and day perspective. So we're looking at a 2 up failed 2 down that we had today on the 4-hour, right? Excuse me. And we're at the top of this range here at the 24, 25 level, so a little above the 25 level. Again, this year flip. We've been above it a couple of times in the last 11, 12 weeks, and we've ended up rejecting. So we want to look for, you know, if we're getting price to the downside, if we trigger to the downside, if price goes lower than the low of the second 4-hour candle of today, then that's triggering a 1, 2 up combo 2 down, right? And that magnitude is the low of the candle to the left of the one, so that would be this candle, which 2657 down here. So that's a long ways to go. We do have a gap to, you know, kind of build some momentum, but, you know, gaps are kind of fickle. We've talked about before how you can bounce off of gaps. Even when you enter gaps, you can bounce or reject off of the 50% of the gap. So we want to keep those in mind from a 4-hour perspective. If we're going to have, you know, consolidated movement again tomorrow, even if it is in the downward direction, you don't want to get too far ahead of your skis there and be targeting, you know, gap close or the magnitude of the 1, 2 up, 2 down, if we're just getting some just barely downward action, right? So you want to kind of keep that in mind. We are in an uptrend as well, so you want to kind of temper your thoughts as far as, you know, how far you could pull back as well. You know, it's perfectly reasonable to think that you could get a pullback to close the gap, maybe even test last week's high, which is also this week's flip, which would flip this week red, especially if we get back down below the year flip. But we're in the overall uptrend, looking to try and break out of this 11-week range. So there's also plenty of upside that can be had, especially with how this 4-hour candle closed today. We got a failed 2 down, you know, a green hammer. So we would look for, if price action tomorrow breaks above the high of this candle, we're looking to target the high of the 2 to the left of it for the 2 down, 2 up, right? That's our first target. But then, of course, we've obviously got last month's high at the 29.66, and we got further targets up as well. If we take a look at our notes, you know, when we drew the Fibonacci from, we'll just put it up there again. from the top of the move to the bottom of the move, right? Once you get past 29.66, we can go ahead and put the 23 up there as well. 123, let's take that off of there. 123.6. All right, so if we put that line up there, we've got the 30.36, which also lines up with a level that should be, ingrained into everybody's brain. If you're not new to this channel, this 30.55, that's the 61.8 fib of the 2020 low to 2021 high, or all-time high. So if we look at that here, we've got the 2020 low, 2021 high, which is also the all-time high. We draw Fibonacci's there, and we've got the 61.8 fib at 30.55. So that can be a very big rejection point there. You can see how it's been support and resistance in the past, and so it's definitely going to come into play. All right, so those are just extended targets for the 4 hour if we get up there. Right, so we got 29.66, 30.36, which goes with the 30.55, and then our extended targets past that. All right, so we've got our triggers and targets to the upside and downside. Let's go look at our notes. All right, these are for Thursday, September 11th. Tomorrow there'll be 75 trading days left in the year. We closed today at 28.60, and we know it flips the week, the month, the quarter, and the year red. We've got to actually change that to red, right? Because we're full time frame continuity to the upside now. We know what our market makers expected move is. Again, if you're not familiar with that, go ahead and check out our weekend video. We go into a little bit more detail there. And then we have our gaps above and below. This gap is actually a little bit bigger now since it went from here to here. So this is 27.37. Yeah, 27.37 to 28.68. So that gap is a little bigger now with today's gap up. And then of course we've got the gaps at the higher levels, and then we know what our gaps are to the downside. So we've looked at from the upside. If we do go to trigger the 4 hour to the downside, we have that 1-2 up combo 2 down, triggering at 28.07, targeting 27.70, 27.43, and 27.08 on the way to the magnitude of the 26.57. The reason why we put those targets in between the trigger and the magnitude is because number one, we're in an uptrend, and number two, that's a $1.50 move, which is a pretty high percentage move in SOXL. You can see $1.50 today, a little less than $1.50 today, was a 5.22% move. So do we get 2 5% move days back to back? I'm not sure. So that's why, if we don't get to that 5% move back to the magnitude of the 1-2 up, 2 down, we do have some targets in between there. And then again, to the upside, if we break above 28.68, we're targeting 28.83 with our extended targets of 29.11, 29.66. And then we won't have too many more extended targets because they basically just roll into the day anyway. So let's look at the day chart. All right, and we can see again, we had the green hammerish, doji-ish kind of candle, however you want to call it, right? Somewhat bullish. But if we do break to the downside below the low of today's action, 28.07, then we're targeting the low of this candle for the 2 up, 2 down, right? So the low of this candle is 26.57. If we go 2 up tomorrow, if price action goes above today's high, then we're just looking at a 2 up, 2 up continuation. So there's a very clear entry, obviously, at the high of today. But your exit, you want to look for maybe the high of the previous higher high, which is the 29.11, and then we're looking at the 29.66. So if we go over to our notes, we can see to the downside, we've got the 2 up, 2 down, triggering at 28.07, targeting 27.43, 29.66 with the magnitude, 26.96 with the magnitude of 26.57. Right, so that's basically the same magnitude of this 1-2 up, 2 down, which is why I say that the 4 hour triggers and targets really roll into the day. We don't have any further extended target on that. I mean, we could, just because it's the day. 26.11, 25.84 are obvious. 26.11 and 25.84, right? That's last month's 50% and last quarter's high. So those are some extended targets we can have. But again, that'd be a more than 5% move day. So I'm not sure we'd really make it to there. Again, to the upside, we don't have a reversal. We've got a continuation. So two up, very clear entry. Oops, this should be target because we don't have a magnitude, right? Magnitudes are only for reversals because that's the clear exit. So we don't have the most clear exit. We have to look at price action preceding us. So we've got the 29.11, 29.66, and $30 flat that we have our targets for. So again, that's how we look from the day and the 4 hour. Again, we've been in this range for 11 weeks now. So we could get more upside. That's what we got previous in the last not the last time we tested the high, but the previous time we tested the high. We got price above it, and then again a day of price action above it, closing green, not below the year flip. But then the next day we did flip back down and then go back to the bottom of the range. So continue to play the upside if the upside triggers. We've got our targets, but we've got to watch for that downside reversal back to the bottom of the range. And if we do get that, especially on the day perspective, if we go below today's low, then we're looking to enter puts for October, November expiration and selling some calls. Probably only want to sell calls for October. I wouldn't want to leave those wouldn't want to sell calls for too far out past that. But that's how you can capitalize on the downside. So from the 4 hour intraday, 4 hour, and day perspective, we know what our triggers and targets are. If you have any questions, if I went through anything too fast, let me know in the comments. Let's go ahead and look at things from the week perspective. Week. So there we go. Again, we're looking at the 2 down, 2 up with the higher low on the week. So we are targeting the high of this candle right here, the 29.11. But we do have, if we do break above that, we've got our next target of this, I don't want to say all-time high, but the high of this full move, right? The highest high of this move from April 7th low. We've got that as our other target, and then we've got the weekly broadening formation that we still got to deal with as well if we break through that. So we're looking bullish, but we've got some resistance that we've got to get through. Once we do get through that resistance, then things should be a little bit easier. We're targeting higher highs on the week. One up here at 32, one up here at 36. Yeah, 36. To maybe press this weekly broadening formation, possibly even close this gap if it takes us a while to get up there, right? So we've got last year's 50% up here at 46.79. Again, we don't want to get into too much predicting. We just like to play price action how it comes to us, but we can see where things could go if stuff gets really bullish out there. So last year's high was $70. So we're a long way from $70, even just to make it to halfway of last year. 46.79. That's another big move, and some could say that's where it should go, because if you look at this from a bull flag perspective, especially coming from here as your flag, you take the flag and you put it on top of. You take the pole, the length of the pole, and you put it on top of the flag, and that takes us up to this level. So that's a long ways down the road. Definitely would need like a Santa Claus rally or something like that. So we'll keep that in mind, but that's down the line again. So that's the week. If we look at the triggers and targets, again, we triggered to the upside. We're targeting there. If we do things get real bearish, CPI is horrible or something tomorrow, and we go back down to the downside, we would have a bearish engulfing or a red 3 candle here at 23.80 if we go below there. Then again, if we do that, we're breaking below last quarter's or this quarter's flip, this month's flip, and testing last year's low. So things would get kind of bearish, and we'd be looking to possibly close this gap at that point. But that's where everything looks from the week perspective. The month, again, we still haven't triggered to the upside or downside. So just looking to see if we can even reach the highs here of last quarter, of last month, and if so, can we press above to get that 3-2 up? If we do get the 3-2 up, we've got to watch how the month finishes, because if it's like a failed 2 up or just a weak 2 up, we run the risk of having a 3-2 up, 2 down next month, which would then target the low of this 3, which is 22.57, and then we're talking about this gap again, and then being at full time frame continuity to the downside. So that would have a lot more bearish outlook at that point, but we just got to see how the month finishes out. The quarter, we talked about this earlier. We're just looking to get the high of this candle, which is at 36.15. We're still in force with the 2 down, 2 up, meaning current price action is above the high of last quarter, so we're all good there. And then the year, again, we flip to the upside. So the quarter is the only one that is the highest time frame that we still have, a magnitude to try and hit to the upside. So we'll continue to watch that. But yeah, that's basically how we're looking. I hope everybody's enjoyed this video. If you did, please give it a thumbs up. It helps the channel spread the news about SOXL. It's not new, or people out there trade it, but the more people that trade it, the more liquid it gets, which is better for everybody. And to also kind of promote the strat. I didn't invent it. If you want more information about the strat, check out the description to this video. There's a free PDF you can download, and there's a link to Rob Smith's YouTube page. He's the inventor of the strat. He's no longer with us, but his YouTube page is still up. The strat's been around for years. It's proven. There's a big strat community out there on the internet as well, if you're not aware of it already. So if you want more information about that, there's plenty of information out there about the strat and about Rob. So do your research, and I've provided a little bit of material for you as well if you need a start. So I hope everybody's enjoyed this video. If you did, give it a thumbs up, and hope you get some good rest tonight. That way you're refreshed for tomorrow morning. Wake up tomorrow morning. Hopefully we'll get a better trending day than we did the past couple days. Just seeing overnight movement and nothing really throughout the day. But if that's the case, then we'll just take any opportunities that present themselves and continue going from there. So we'll see you tomorrow out there in the market, and good luck trading.